Well, hello, and welcome. Welcome and hello. My name is Danny Deals. It's still Danny Deals. God, I wish I were someone else sometime, but it's still me, folks. Good old Danny Deals, your buddy. Thank you for tuning in to Un Poco Mas, the show where we give you just a little bit more. Other shows they give you a whole lot, they do what they can, but we give you that little bit more. Un Poco Mas goes to 11. This one goes to 11. Well, couldn't you just make 10 a little bit louder? Mine goes to 11. Guys, if the day ends in a Y, I am going to talk with you about the SOFI stock, ticker symbol SOFI. Let me drag my giant dome over here. Get that out of your way. Guys, the SOFI stock, wild goings on over the course of the last 24 hours, even 12 hours. Guys, the stock is down 6 cents on the day or 0.71%, but that doesn't really tell the story at all here, guys. The real story is SoFi was dumbgraded by Morgan Stanley. It's a dumbgrade. A dumbgrade is where an analyst makes a downgrade of their ostensible call from, say, neutral to sell, while they upgrade their price target from $6.50 to $7. So that's a dumbgrade. It's designed to put all this FUD and amplification into the media, and I'll show you during this video that that's exactly what it did. I mean, every single outlet has published this call by Morgan Stanley. They've called it a downgrade. They've called it bearish. Almost none of them mention that they're actually raising their price target considerably. I mean, when you talk about $6.50, I mean, raising the price target 50 cents, like, I don't know, what is that, 7% increase, something like that. So it's actually a significant boost to their price target. They're kind of chasing the price. But I think they're downgrading to basically help market makers cover their giant short position, get out of trouble. They shorted the hell out of the stock, guys, and I believe market makers are basically trapped in their bullshit, and they're digging as hard as they can. I'm waiting any minute for another downgrade from the Chia pet, because Morgan Stanley said their bull case is 12, their bear case is 3, and the Chia pet is at 3 right now, and I know goddamn well he's not going to be having another analyst with a lower bear. I think $3 is his bull case, and I think his bear case is the stock has a negative value, and they're all I don't know. I don't know what his bear case would be. He's valuing the company at like next year's sales, no value whatsoever on the technology side. That's another thing I want to talk about, guys. But just want to make a point, guys. The stock gapped down quite hard, way down into the eights. Bottomed out, in fact, guys, around $8.80, even broke down below that. But guys, the gap has been filled. You can see that here already. Even even the very end of the close, it's been filled already, guys. So I mean, the stock came back extremely hard. Whatever market makers were trying to do, it didn't work. They weren't able to kill the volume and control the narrative, because I think retail is completely on to this at this point. Every time the stock starts to rally, put some good news together into earnings, we have these dumb grades by whatever, shill or legacy bank is shilling for the shorts and the bears that day. And, they don't want to destroy their averages, I think, some of these analysts, because they actually care about their reputations, unlike people like the Chia Pet, who's a 0-star analyst, one of the worst analysts in the country. His job is obviously to be wrong, in my opinion. He's wrong on purpose. And he's dishonest, and that's just my opinion. I mean, the guy's obviously an intelligent, educated guy. To downgrade SoFi on a pretty good earnings report from $8 to $2.50 and put the market cap at next year's sales, value nothing on the technology side, nothing on the growth, not, project realistic margins, put out, 5 downgrades and reiterations of your downgrade in 1 quarter. It just stinks to high heaven, guys. And then you look at, the bologna sandwich at Compass Point. He worked at BTIG for 8 years, and the guy in his chair, on the pump, He's never rated SOFI. He initiates at 14 and a buy. That turd, I forget his name at BTIG now. But then, the bologna sandwich who moved over to Compass Point from BTIG, then just a couple weeks later, he initiates the SoFi stock again. Never covered the stock in his life. The guy just, looked like he woke up and fell off a turnip truck with a giant forehead. Um, he initiates and he's a sell at 5. So he works at BTIG, his career's there. He moves over to Compass Point. The new guy there, they're both educated, both intelligent. One on the pump is 14 and buy, the other one on the dump is $5 and sell. So it sure seems like a lot of these people, I know this wouldn't be ethical and perhaps could even be illegal. I'm not a lawyer, but just sharing my opinions and thoughts, as I'm wont to do. You wonder how these people can arrive given the same figures, the same math, the same training, the same techniques they're supposed to use to put valuations on these companies. How can BTIG hire these same brilliant people who one is at 5 and one is at 14? I mean, that's almost 3 times difference in market cap. How can one of those people be so stupid? Do they have an agenda, guys? I think the answer to that is pretty clear. Let's look at the options, guys. Of course, in the toilet, absolutely in the toilet today. This isn't going to hold up, guys. Again, I told you this is what was going to happen yesterday. Market makers are going to suck the profit out of the options. Somebody's going to downgrade the stock, and then they're going to dump this shit on retail's heads and then try to kill the options on Friday. The difference is, guys, I don't think it's really working. If you look at all the volume there at $9, that's where the bulk of this is. So they have to hold the stock below, 920. So those options are basically worthless. I think there's too much volume. Yeah, they're killing it somewhat successfully, but they're paying the price, guys. They are paying the price, and retail is finally making these guys pay. Every time the stock falls, retail is buying. And I believe some institutions and insiders are buying. I haven't checked the filings recently, last couple minutes. I mean, recently, yes, I have. But it's just not working, guys. There's 29 million shares traded today. It's June 13th, 2023, Topper time check. It's 9:49 a.m. out here in Los Angeles. Almost 1 p.m. out in NYC. Hope it's a great day wherever you guys are. But we have about 3 hours left in the trading day and already traded almost 30 million shares. The algo has kicked in pretty well, so the volume indicator is pretty steady, but it's not flatlined like it would be if they were really in control of the stock. Guys, heading over to the short interest, let's just take a look at that very quickly. Taking an overview, if you just want to take an overview, the current short is 15.58%. The free float on loan just shot back up a little bit. So they're borrowing shares again today. It looks like, oh boy, they returned 7 million net borrow change, 7 million. I don't think that's accurate. I think that's a little out of date. If they'd returned 7 million shares out of 30 million traded, the stock would be up huge, and the borrow wouldn't go up, and the cost to borrow max wouldn't be 9%. That's usually below 1. So this data, guys, is skewed heavily. Vortex is trying to catch up with what these bastards are doing in the dark pool with their minions at Morgan Stanley, who downgraded the stock. Let's talk about the downgrade, guys. Morgan Stanley, why is it 2 different analysts? On tip ranks and a lot of the media, they say this gentleman, Jeffrey Adelson, downgraded the stock to a sell and raised the target price to $7. Then if you look at Benzinga and some other sources, it says that the stock was downgraded by analyst Betsy Graysick. And then they attribute the quotes to, they attribute the same quotes to Betsy Graysick as they do to Jeffrey Adelson in other articles and here on Tip Ranks. So guys, if you check out Benzinga, I'm not logged in on my computer, so I'm just looking at it on my phone. But then if you look at Tip Ranks, you look at a lot of the other articles, they attribute it to this Jeffrey Adelson. He's a 2-star analyst. Betsy Graysick, they have listed as a 4-star analyst, even though her track record isn't that good. And she used to be quite a good analyst. I don't know if she developed some type of problem or what happened, but she seems to have fallen off, although TipRanks gives her a hell of a lot of deference. Jeffrey Adelson, again, this analyst from Morgan Stanley who did a sell while upgrading the price target. I call that a dumb grade. He is a 2-star analyst ranked 5,176 out of 8,500. 3 out of 11 of his transactions made a profit. If you copied his transactions, held the positions for 1 year, you'd make a profit 27% of the time. But he just doesn't have enough holds on there. And then if you look at Betsy Graysick, she is listed as a 4-star analyst. Though I think that's being extremely generous. TipRanks gives a lot of deference, I think, to who you're with, your reputation. But again, she's ranked in the top 2,000. But if you look at her transactions, each position hold for 1 year would result in 50% of your transactions generating a profit with an average return of 4%. So she's almost the same as flipping a coin, guys, and that's a 4-star analyst. I'm right more than half the time, way more. You can hear me now, believe me later, but my account suggests I'm right well over half the time. Guys, looking at Betsy Graysick, again, she is a big heavy hitter, but she covers U.S. large cap banks, global head of banks and diversified research. She has all these awards back in 28, 29. 15 years ago, she was considered a really good analyst. She received her BA in Japanese Studies with a minor of economics from Cornell University and studied at Waseda University. MBA from Columbia, guys, heavy hitter. But is she making the call, or is this, D-bag of, what's his name, Adelson, making the call? It's hard to tell. She has a great reputation. Her track record is so-so. He is a newbie. His reputation is not that good. He's kind of, I think, one of these guys that doesn't mind throwing his reputation away. But you notice they don't put their bear case on the target to really kill the rally. I don't think they're prepared to come out and say this is a $3 stock or a $5 stock like the bologna sandwich, because it's just a bridge too far, guys. I don't think they're willing to humiliate themselves quite the way a two-bit institution like Wedbush is. And it's sad to see how far Wedbush has fallen over time. But guys, coming into earnings, I think these shorts are scared as hell. I think that's why they keep attacking the stock. I think this is why we see another dumb grade from Morgan Stanley here today. Guys, I just want to tell you, why do I think these valuations are so wrong and so stupid? First, let's just take a look at what Morgan Stanley says. Whether you attribute this to Jeffrey Adelson or Betsy Graysick, I think they're probably, on the same team. He works under her. So, they probably have more than one person, obviously, in banking. But she's a big cap bank person. That's why I think she doesn't understand fintech. I don't think she really understands this call she's making, and she's putting her name on it. But basically, guys, this call values the technology side at zero. I mean, they're saying, okay, SoFi's grown fast and we've given them credit for that valuation and the growth, but now we need to value them more like a traditional bank. But this is logically flawed on so many levels, guys. A traditional bank does not have a wheel strategy. A traditional bank just nickels and dimes people for fees, makes money lending, makes money on their wealthy clients, charging them fees. They don't, nobody goes to Bank of America for insurance, guys. No, most people don't go to Bank of America for a mortgage loan. They go to a specific home lender, like the one SoFi just bought. Nobody goes to Bank of America to refinance their student loans. Nobody goes to Bank of America for a personal loan because they're going to give you shitty terms. Nobody with a brain holds their money in a Bank of America checking account because they're going to pay you 0.001% interest, even though they're going to charge you through the nose on your credit cards and your loans. Guys, the mega banks do not have a wheel strategy. They don't cross sell you. They're not reducing their customer acquisition costs because they don't care about customer acquisition. We were just talking about yesterday, guys, how SoFi is generating more personal checking account opens in absolute terms than Wells Fargo. SoFi has gone from 1% to 4% of that market in the last year. Wells Fargo slipped to 3.5. So SoFi's actually got a bigger share of the new personal checking accounts in the United States than Wells Fargo. But like, whoa, that's bearish because 96% of the accounts are being opened elsewhere. I'm like, how big a fucking moron could you be? I mean, these bears on the, stock boards have barely, they're flatliners, guys. There's not two brain cells to rub together. I mean, SoFi's only been a bank a couple years, less than what, 2 years? Do you expect them to have 100% market share or 90% market share? It's like, well, that they've 4x their share from 1 to 4, that's bad because they don't have all the market, still 96% of the market. I mean, guys, the bears, the trolls, they're so fucking stupid. It really should go to show you that SoFi is a really good stock and you cannot build a good bear case against a stock. I can because I'm smart and I can think and I can see what the problems are, the potential pitfalls with the business. Of course, I'm not going to tell you that because I'm here to pump the stock. I have my Reebok pumps on. You have to trust me on that. I'm down pressing the little basketball in the tongue, just cutting off the circulation to my feet entirely. That's what you need with your children. Shoes that pump up, push all the blood out of their feet, give them a 90-pound backpack full of textbooks, crush their little spine, have them all hunched over, carrying 40 pounds of books to school. Give them 4 hours of homework, never let them go outside, see the light of day, spend the rest of their time playing meaningless games on their cell phone. Guys, what's wrong with these kids? I don't know. I digress. But anyway, guys, what is wrong with these analysts? We previously valued SoFi on a growth adjusted basis, given strong growth well above most banks, which they still have. You know, look at the growth in their bank, the deposits, the direct deposits. No other banks are growing like that. So this is absurd bullshit FUD on its face. It's just rationalizations to kill this rally. That's what they do. Guys, Topper time check, 10 a.m. out here on the Pacific Standard Time. Still holding SoFi at $9.15, trying to kill those short-term calls after the market makers wrung all the profit out yesterday and dumped that shit on retail, and then got this dumb grade, timed the dumb grade with the options killing and the shorts with Morgan Stanley. Couldn't be more obvious. Betsy Graysick was beating Jeffrey Adelson with a baseball bat, forcing him to make this call. He's from Cornell. She's from Cornell. They're both a couple of Ivy League all-stars, just downgrading SoFi on command from the turds above them. That's how it works, guys. Turds flow downhill, and Betsy and Jeffrey, you're just a couple of huge freaking turds. Anyway, guys, back to the fun. The current share price the company is trading, and this goes to show you their math. He estimates the business can only generate a 15% return by 2026 for consumer finance companies. That would only justify a 1x price to tangible book value multiple. However, the analyst does expect SoFi to exceed that level, eventually reaching 20%, and that's exactly what management tells you. It's not figuring anything out. It's complete bullshit. The analyst also expects that the student loan refinancing opportunity about half the $200 billion that SoFi expects. Higher rate graduate debt, not parent plus loan or undergraduate, most likely to refinance. He assumes 60% of remaining higher grade would fall within SoFi's box. Our new forecast assumes revenue volumes ramp by 75% in 24, but remains 10% below consensus and 1/3 below pre-COVID. His underweight rating is more bearish than the SA Quant rating of hold. However, Seeking Alpha's rating of buy and average Wall Street rating of hold. So what's so wrong with this logic, guys? Basically, the huge logical fallacy here is that they place zero value on the technology side. SoFi paid what, over 1.2 billion for Galileo and 1.1 billion for Technesis. So that's 2.3 billion they paid for this company. And I am telling you, I have talked to people who build these systems, who build this software. People actually know. I'm not a software developer. I'm not an app developer. I'm certainly have no expertise in the software that runs banks and fintechs and trading and all that stuff. But guys, the technology stack SoFi has built here and is currently trying to sell to 12 major clients they're in talks with, according to management, they're valuing that at zero in this valuation. Um, the same thing at Wedbush, the same thing with these turds. Like they paid 2.3 billion for this company, and I submit that it's worth way more than that. The whole is worth more than the sum of its parts. This has not ramped at all yet, guys. The SoFi is barely seeing the benefits of these efficiencies in their own business, much less selling the business to other people. Galileo had a ton of smaller clients. They weren't durable. They weren't making enough money. They're going through a restructuring at Galileo, which also, Technesis is now under Galileo. That's they're trying to build the Amazon Web Services of fintech. They want to be the backbone of banks, of other fintechs, and they're already making great strides in that direction, in my opinion. The FUD spreading machines freaked out because they lost 5 net accounts last quarter, but Noto and LaPointe came out and explained, like, look, this is part of our strategy. This is why we bought these companies. We didn't buy them to sell to small local institutions that don't generate revenue. They're not looking for peanuts, guys. They're looking for big fish. And when Galileo hooks a couple of those big fish and that goes out in the press, that completely changes this valuation. I mean, how can an idiot like the Chia pet at Wedbush, David Chiavarini, a 0-star analyst, a hack, who in my opinion is intentionally wrong. His job is to be intentionally wrong. You could not be that wrong if you tried. You could not be that shitty of an analyst as David Chiavarini with Wedbush if you tried. Holding his trades 1 year would result in 36% of your transactions generating a profit, and your average return would be 8% negative. You do better pulling stocks out of your ass or throwing darts at a board or flipping coins. You'd at least be right half the time. But this guy's an intelligent, educated professional, and he's wrong 2/3 of the time. Why? Because he's right. He's trying to be wrong, in my opinion. He's a shill. He's a short seller shill. He's a dishonest hack trying to trick unsophisticated retail investors. And people are making the point, well, didn't you buy on the dip and make money off him? Yes, I did, but a lot of stupid people with stop losses got killed because he's disingenuous, in my opinion. I mean, his calls don't make any sense. He's a buy for years, and then after a fairly good interest rate or a fairly good earnings report, he downgrades to 5 and then downgrades to 250, making the stock worth, making a growth stock, which is growing rapidly and has good margins, worth next year's sales. When all other credible analysts, even the bearish ones, guys, Morgan Stanley's a bear. This is clearly a bearish call. They're very bearish on SoFi. They put zero value. They don't even talk about it. They don't even talk about Galileo. Do they value it at 1 billion, 2 billion? I mean, they paid 2.3. The company has to be worth that, guys. I mean, this is absurd. I've been saying for a long, long time, Galileo is eventually going to be worth more than the other half of SoFi, because it's the machine that builds the machine. You want to control the information. You want to be making money off of your competitor's business as you grow your own business. Guys, this is like Tesla opening up its charging network to all these other companies, making revenue off of all their competitors. I could think of other examples, but guys, this is the special secret sauce. This is what people aren't telling you about. It's two things. It's the technology side and it's the wheel strategy. It's the cross-selling. And neither one of those things has even taken hold yet. And SoFi's already doing this well, and they still just downgrade the stock every single chance they get. Just piss all over our Wheaties, take a massive turd in our punch bowl, whatever you want to call it. Guys, that's the SoFi stock. Not sure what else I can tell you, what else I can rant about here today. We have another disingenuous downgrade. I would like to ask Betsy Graysick, what does she know about technology? What does she really know about fintech? She's a dinosaur, guys. She's been, covering large cap banks for 20 some years. She doesn't know what SoFi is. She doesn't get it. The younger guys get it, guys. The younger guys get it. you know, they understand. They're using this thing. Even the bears, guys, they're not, this data is bullshit. We see 7 buys, 7 holds, 3 sells, guys. They upgraded their price target. It's a dumb grade. It's not a downgrade, it's a dumb grade. They downgraded their position and upgraded their target price. Guys, the target price is what matters. And even these bearish analysts at JP Morgan, they're at 6. Even the bearish analysts at Morgan Stanley, they're at 7. Okay, guys, the dishonest turds, in my opinion, dishonest turds like Giuliano Bologna, the bologna sandwich, he's at 5. And the extremely, extremely dishonest turds who don't even make any pretense about trying to be right, they're just spreading FUD, guys. That's all they do is spread FUD. The Chia pet, David Chiavarini, the 0-star analyst, the hack of hacks, the garbage of garbage, the stinkiest of the stinky, the pasty, bespeckled, short selling on his knees, absolute sack of dump. He's at $3 in a sell, guys, and we have to respect his call. Honestly, we do. Taking a look at the updated live short interest, we're going to see a massive. Again, I don't believe this at all, guys. 15.5, it still hasn't updated. Cost to borrow, this is bullshit, guys. Don't look at this today. The Benzinga call, they don't have this on here. I'm not logged in, but please read Morgan Stanley's call. Betsy Graysick downgrades, Chia Pet reiterates, of course, because Truist reiterates their buy. And again, just taking a look, guys. Andrew Jeffrey with Truist, who reiterated the buy at $11. Compare his track record that I just showed you to the Chia Pet, who's wrong all the time. Intentionally, in my opinion. It just looks that way. With his timing, with his very unusual 5 reiterations, 3, 4, 5 negative notes. It is unheard of, guys, to see an analyst at a major analyst house put out 5 negative notes and 5 reiterations of a downgrade against one stock in 1 quarter based on a pretty good earnings report against massive, massive FUD logic that doesn't make any sense. Guys, I know, he has the right to freedom of speech. People can say whatever they want, but I do wish the SEC and the FBI would investigate companies like BTIG and Compass Point and Wedbush that, sort of time and coordinate things, in my opinion. At least it seems like that. I mean, the 2 downgrades with the short attack after earnings. But guys, look at Andrew Jeffrey with Truist Financial. He's kicked way down the line on the SOFI rating because, every time a good analyst, a good 5-star analyst comes out, he has an $11 buy rating. Or no, he has a $9. What does he have on the SoFi stock? Sorry, guys. I think he has an $11 buy on the SoFi stock. Yeah, that's right. He reiterated. But I just want to point out, he's number 113 out of 8,500 analysts. The Betsy lady was 2,000. So he is in the top, like almost top 1%. He makes money 67% of the time, more than 2/3 of the time. His average return is 13%. Guys, the Chia Pet, this number was 36%. If you copied Andrew Jeffrey's trades, you'd make money 67% of the time, and your average return would be 13%. That was negative 8% with the Chia Pet, David Chiavarini from Wedbush, one of the worst analysts in the country, someone with 0 credibility, 0 self-respect, somebody who, in my opinion, is willing to say and do anything to serve his short seller bear masters, make them a buck while shitting all over truth, justice, and the American way. What a piece of shit. In any case, guys, that's the SoFi stock. SoFi Technologies, Inc. I would like to thank you for watching. Un poco mas. Let's get one more check of the price action before I send you out the door. Don't forget your jacket, guys. I know it's not cold now, but it could get cold later. And if you lose that jacket, oh, your father is going to tan that hide, guys. Don't lose that jacket. You know your parents. That's probably the worst sin you could do is losing that jacket, guys. Your mom's going to be very upset. She got you that jacket at Mervyn's for Christmas. That's a nice jacket. It's got the little inside pocket. You lose that jacket. You left it on the school bus. Just got to go down to Lost and Found. God, it's endless hassle. Why can't you be more like your sister? Your sister's on the honor roll. What's wrong with you? You're out losing jackets, playing sports, always on the video games. Anyway, guys, that's a SoFi stock. We got dumbgraded again. Morgan Stanley is clearly wrong. None of these analysts, none of these bears, they don't even talk about the technology side. Obviously, spending over $2 billion on these companies hurt the balance sheet in the short term, but SoFi is a company that exists for long term success. And if you are an intelligent, disciplined, thoughtful, long term investor, SoFi, ticker symbol SOFI, is one of the best companies you could invest in all across the stock market. In my opinion, of course, I would never give financial advice because I'm not qualified, I'm not licensed, and I have been accused of being a big, blowhard idiot who doesn't know anything, and there's probably more than a little bit of truth to that, but I'm going to say, not financial advice. Buy SoFi, you turds. Buy SoFi. Not financial advice. Buy SoFi. Were I you, I would buy SoFi immediately. Buy some shares, you turds. The IPO price on this turd was $10. We have 2 years of outstanding execution, great track record. Management's proven everything they have to prove and then some. And if Betsy and what's this other turd's name? Jeffrey Adelson and Betsy Graysick and all these other fruitcakes don't like it, well, they can go do a dumbgrade. They can dumbgrade us to $3, dumbgrade us to $2. I'm still a buyer of the stock. My target's still $13.75. Strong buy from Strong Arm Trading. It's Hurricane Lopez. You ask me if this Jeffrey guy is sporting a 22-inch bicep. Yeah, I do more preacher curls than I do study, analysis, and due diligence, and I think that's good. It fires me up. It gets me pumped up to talk to you turds. I hope you guys have a great day. It's a SoFi stock, ticker symbol SOFI. I'm sorry, how did I mess up the ticker symbol? I'm getting excited. I'm spitting all over my microphone. It's un poco mas, guys. It's let me get you that in big form. It's un poco mas, okay? Un poco mas. Today, I think I gave you a lot more. You guys want to play Quién es más macho? That's what that TV judge. ¿Quién es más macho? You don't want to play ¿Quién es más macho with me because I'm más macho. You don't want to play ¿Quién es más macho? We could eat some gazpacho. But anyway, guys, it's a SoFi stock. I'll talk at you later. I'm clearly loopy and out of ideas. It's un poco mas. I'm Danny Deals for Ken Lopez and Stock Karen. We hope you guys have a great rest of your Thursday, and we'll talk at you again real soon, sooner than you can even possibly imagine or stand. Un poco mas, Danny Deals. Bye-bye.